What's up, homie? It's Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to HowieVerse, where we treat investing with actual data. In this video, I'm going to share with you stocks that I'm avoiding in buying in 2026. Let's get to it. First one on the list here is Tesla. If you look at Tesla, there is a beautiful parallel channel dated back all the way to March 2020 over here. And everybody knows what's going on in March 2020. In the bottom side of the parallel channel, it got tagged again back in January 2023 over here, and also in 2024 over here. On the top side of the channel, you can see that the first time it tags is around November all the way to January 2022. It tried to tag it 3 times, but it failed. And as you can see over here in December 2024, it reaches to the top side of the channel again. If you look at what's going on in the Liberation Day in here, it didn't quite tag the bottom of the parallel channel. What's going on here? You can see that Tesla has broken through this upsloping trend line, and then it's going down even further. And in the short term, you can see this confluence of indicator where we have a downsloping trend line and this upsloping trend line, where the low is back in 2024 at the bottom of the parallel channel, and also it tags the Liberation Day. So needless to say that this upsloping trend line is a very important support. And at the same time, you see there is this downsloping trend line. So over here, they're going to fight to who is going to win in this channel. What I'm predicting is correct. What's going on is that Tesla stock is going to tag down here in the short term, and then it's going to break to the upside. And where is the upside going to stop? It's going to stop here. Right? So it's going to stop here. And then what's going to happen again is that it's going down all the way to this over here to the bottom of the channel. And why do I say that? The reason why I say that is that you see that bottom of the channel, and if you draw a line, a horizontal line to this region right here, what's going to happen is that you see there is a confluence of indicator where the Liberation Day low and also the low of this parallel channel. So there is a very, very strong support here for Tesla stock that indicates that Tesla is going to bounce huge in this region. That is going to happen around next year in January 2027. In addition, if that is not bad enough, look at the price to earning ratio trailing 12 month here. It's 321 multiple. It's crazy. In tech stock right now, in this current situation, in this geopolitical situation, if you can get like 30, that's already considered expensive. Now it's 321. It's 10x of the norm here. With that being said, Tesla is not going to go up anytime soon due to the technical, where I predicted that it's going to go down all the way to $210 in January 2027, and also at the current period of time where the PE ratio is way overvalued. The second one on the list is Palantir. Oh boy, Palantir is bad. If you see what's going on in Palantir right here, it has broken through this upsloping trend line, and this upsloping trend line is dated back all the way to August 2024 right here, and then it also almost tagged it in November 2024, and then the low here in April 2025. And over here, it almost tagged it to this confluence of line where there is this $125 level that has the resistance up here, and then also there's a lot of chop around this area for this $125 level. So the confluence of these two indicator on this region has already indicated that the stock is going to bounce, and lo and behold, it really did in the past couple months, and it traded sideways. And the thing with Palantir is that Palantir is a software stock, and it has a bigger sentiment on the software stock that AI is going to take over all the software stock, and Palantir is no different. And the thing is that when AI is going to take over, because AI can code a lot more faster, not only is faster, it's more efficient. And that is the story that's being told in the market right now. So, in my opinion, what's going to happen for the Palantir stock, I predict that it's going to retest this line, this upsloping trend line, and then it's going to go down over here, it's going to test this $125 level. And if it breaks, there is a lot more downside to go. And where is it going to go? Is going to go over here. So if you draw a horizontal line in the near future, it is probably going to tag that level. And from here, where we're at, to that level is about 48% more downward movement. Also, Palantir has about the same story as Tesla, where the price to earning ratio trailing 12 months is very, very high. Here we look at Palantir is at $206, as opposed to Tesla that we saw earlier, it was 321x. So this multiple at 200 multiple is really high, and where the industry standard or industry normal in this current geopolitical situation is at around 30 to 40. And if the geopolitical situation got worse, this might go south. And for all of the normal that is trading at 30 to 40 multiple is going to go down to maybe at the 20s for Palantir, because this is at 200. 200 going to 20, that's a long way downward movement to go. With that being said, not only that Palantir is trading at very high multiple like Tesla, it also has the technical that is not working in its favor like Tesla. In addition, if you take that with the AI story that has been going on with this Palantir stock, where it's working against Palantir, that is the three combo that is making Palantir stock that I'm not going to touch until it get down to my levels. The third one on the list is Lululemon. Lulu sells apparel as products where they have to ship their products from overseas. Due to the geopolitical situation, higher oil price, and tariffs, they have a very strong headwinds, and there is no telling when these are going to go away. So I believe Lulu has more downside to go. Let's analyze the chart. You see right here, Lulu has broken through this trend line, this upsloping trend line to the downside, and it has also tagged that trend line again. This is a classic downward movement where you have the stock that has broken through and then it tags that trend line and from the downside. And that what that means is that it has more downward movement to go, right? So stock doesn't just go down all the way. There is a retracement, there is a bounce in between, where I believe in a short term is it is going to go all the way to this level at $128. And also there is another trend line over here that is at around $100. So in my belief, Lululemon has a lot more downward move to go. And what is that? To realize from here all the way to this $100 level, that is still about 41% downward movement from here. The next one on the list is Nike. Nike actually have the same story as Lulu, where the geopolitical headline that makes the oil price a lot higher right now, where they have to ship their shipment or their inventory from overseas to the North America, and also the tariff. Those are the headwinds that are the same as the one in Lulu. Not only that, Nike business is failing. They're failing in greater region in China. They're not selling that well there. And then also the North America sales where their branding position has been lagging behind their competitors. If you look at what I'm showing on the screen right here is that I wrote this not today or not a week ago. I wrote this months ago in my YouTube video last maybe 3 to 4 months ago, where I talk about this, where the CEO, other CEO bought and Tim Cook bought Nike stock that leads to this fail breakdown. And then it went all the way to tag this $65 ish. And here I also wrote, in terms of technical, the chart is looking good. I'm talking about this fail breakdown where I analyzed the stock around over here in this region over here, right? And it was looking good because the breakdown failed. And what's going on here, I also wrote, this is a potential short-term buy looking for a quick bounce back. And I also wrote the fundamental is still bad. However, this is just a short-term trade for me, which has been paying off nicely. And this is not a good long-term buy, like I said. And since then, like months ago, the Nike stock has been pummeled down all the way to this $42 level. So I was looking for a short-term potential buy. And what happened at the time is my thought process where I bought the stock in this region right here in the third candle, and then it bounced back all the way here. So I think I sold it around here, and I sold it in February 23rd, 2026. So that was a 9% upside from December. So in terms of 2 months, that was a really quick 9% gain from here. But Howie, you said there is more downward movement to go. Where is it going to go, right? So if I look at this, I have this trend line down here where if you see that is dated all the way back in March 2000, and everyone knows what's going on in 2000, which is the dot-com bubble, and then it tags it again in 2002, and then it tags that again during the banking crisis in March 2029. And from here, the downward movement of what is currently trading, that is another 46% more to go to tag that $22 level. Look, I'm not saying that Nike for sure going to go to this $22 level. What's going to happen is that if this situation, the geopolitical situation, not happening or not being resolved anytime soon, that makes the higher oil price for longer, then Nike will likely, not for certain, but likely going to this $22 level. And not only that, the tariff is also working against the company. In conclusion, there are four stocks that I'm avoiding right now: Tesla, Palantir, Nike, and Lulu. For Nike and Lulu, you can also expand this to other companies alike. For example, Nike and Lulu, they're selling apparel, they're selling clothing, they're selling shoes. I would avoid this type of company where they have to get their inventory from overseas, where the geopolitical situation that makes the oil price higher for longer is very uncertain right now. Plus, the tariff that is also working against this company. So, for me, capital preservation or risk management is crucial. It is better for me to not catch falling knife, and I will practice patience until the stock has bounced and ride the wave after the bounce. I do have software related stock that I analyze, which I don't mind buying in this falling knife type of scenario, but it will make this video longer than expected. So make sure to subscribe to the channel to see the upcoming stock that I analyze where I don't mind buying. I'll see you next time.